Good afternoon, E-mini Minders. This is Trader Tim from over at eminimind.com, and we're doing a trade recap video today, Thursday, the 24th of October. And it's been a little bit of an interesting week. This is the second day this week here on the ES that we've gapped up and sold off. And if you recall, when we get in situations where we are gapping up and it's coming after a move up, that's a gap that you want to be selling into. And if we gap up after a move down, that's a gap that you want to be buying into. And so both Tuesday and today, Thursday, we gapped up, sold off, and Tuesday was pretty significant because the candle itself was a bearish engulfing, meaning the high was above the prior day's high, and then the low, and more importantly, the open and the close, above and below the prior day's high and low. And when you have a bearish candle like that, if you begin to break down, in this case, move lower, then the candle would typically lead to a reversal if the move down comes right away. Well, Wednesday we had this gap down ever so slightly, but we rallied and closed higher. And so the longer we stay moving sideways up here, the less chance that we have of this bearish engulfing candle actually leading to a move down. So now we're essentially, 4 days sideways up here. And if you kind of look back at last week, we did trade at the same level quite a bit, kind of basically right around the 3,000 here. So the longer we stay here, the more this ends up being kind of like a bull flag. Or if you want to look at it another way, you could draw the uptrend line, something like this, and then sort of a triangle forming like that as well. You'll notice my chart's a little bit cluttered for my standards. I've left these gaps, the yellow unfilled gaps on the chart, and then the blue lines, those have been there for a while, just identifying the higher lows, the kind of double top we've made. If we come up and tag 30-30, we could come back down to this trend line and then make a push higher. Or if we come to 30-30 and then punch through it, and most importantly, close at a new high, then it's likely that we'll go up from there and not make a pullback back down to the trend line here. So that's what I'm looking at on a bigger picture. Let's run through today, and I think what I'll do is clear this chart, and then we'll just run through everything from today. And let me see if I can make this bigger. There we go. All right, so this morning we started with the gap up. And if we look at the first 30 minutes, this is what our range looked like. And we pretty much trended straight down from that gap up this morning. Right off the open, we had a nice retracement in the first couple of minutes, and followed by a second, and then this third one was a little bit dirty. We traded through the 61.8, and then that brought us to the 15-minute mark. And this was a really nice setup, except we had a couple of things going against it. The first was the gap fill was basically touched. We were a couple ticks away. This was the gap fill, and this was, price. So it was just a few ticks away as we were bouncing. And then we also got a low tick, a low nicey tick that lined up at 48s and then at 48s. So we basically had filled the gap and had a low tick at lows. So I decided not to take the short for that reason. One of the things that was in the bearish camp, though, if we look at a 5-minute chart, just after that is the 5-minute candle was a bearish engulfing, this candle here. It engulfed the prior candle, and that's typically a sign of a continuation here in the downtrend. So, but you can see here was the close from yesterday, and we kind of filled that. So I chose not to take the short. We did end up going a little bit lower, and then we got another low tick. And this one down here we had a little double bottom, and the next retracement didn't really set up here. It was a few ticks away. So then continuing the trend, drawing like so, we ended up trading right at the opposing. So here's the tiny little long that's set up off of that 56 low tick. But then we traded right to the opposing. And I like to see either a move that's so small that we don't make it to the opposing trade. So when I say opposing, I just mean here's a long setup, and then the opposite would be a short setup. And when I draw that up, the short trades first. So even though we had a nice little double bottom, a rally to the short, or a rally above this one candle swing high, we did stop right at the short. And so seeing that bearish engulfing candle and the trending through the close from yesterday, I decided to pass on the long setup here. And it got a little bit of a reaction, and then ended up rolling over a little bit more. So that brought us to kind of that 30-minute mark. Oh, and then the other thing was we were like right at the top of the hour. I think it was a minute or two before new home sales. And I try not to put anything on right before a number like that. It didn't really give a huge reaction or spike, but just as a precautionary measure. So then we broke down and moved below the first 30-minute range. So I'm thinking, okay, well, the trend has been down all morning. I mean, really down. And so I drew up the swing high before the 30-minute low, and then to lows, and took the 3002 short. And it made a little bit of a push, came back up to the 61.8. Sold off a little more, got a first target hit, and then ended up coming back up and stopping me out for just a small gain. But that was I like this setup where the 50% lines up with the bottom, or lines up with either the top or the bottom of the first 30-minute range. So, and you can see we kind of stayed around here for a while. We did end up making it to the negative 23% target, but we traded up to a 3,350 before making it. So with the 6-tick stop, if you had your original stop, you end up being taken out. So if you want to tighten your stop, if we haven't broken lows and the setup is big enough, like when we're trading down here, we're basically 2 points away from the entry. It's not a huge move, so I try to leave my stop alone. And so you end up with a little bit more wiggle room. But if you tighten it to the swing high, so this guy here, 3,003 1/4. In this case, it only drops it by a tick, but it does reduce your risk a little bit on the position. This one I actually ended up in at 3,002 1/4. I think I had my drawing, I didn't snap to the exact high, and so I kind of goofed that up, but this one worked out in my favor a little bit. So got taken out of that trade, and then the nice long. So remember we'd been getting low ticks at lows for most of the morning, but not really getting a huge bounce. And then we got another one at 7:30 Pacific, and rallied. This first one, just like the second short, kind of came up. It was close to the 50%, I really wanted to see, because the pattern for the day had been putting in the low ticket lows, but then not getting a big bounce. So I wanted to be sure, or at least have a little more confirmation that this is a trend change, and I'm not just going to be, continuing down the path that of failed setups, if you will. So I wanted to see this swing high break, and we did a little bit later. And then the long was pretty close to the 50% or to the bottom of the first 30-minute range, and kind of on top of this area, this rectangle, if you want to call it that, of consolidation. So a 3000, that same or a 3002 was the long, basically the same entry as the short, only on the long side. And you'll find that happens quite a bit when a short setup fails or trades earlier. Sometimes the long ends up being the same price, just in the other direction. So that 3002 ended up getting a nice reaction, and I'm looking for it to go, back to the top of the range, like 3016. So I trailed, and the important thing, we didn't quite make it there, but the important thing about trailing your stop is, like I mentioned earlier, the swing lows. You want to make sure that we make a high, we pull back, and then we make a new high before tightening your stop. So if my stop is right here and we make a high, we have to pull back and then make a new high. So right here at 808 is when I tightened my stop up to here. And so what ends up happening, we make a high, we pull back. If you jump the gun and bring your stop up here, a lot of times you do get a two-leg pullback. But notice this swing high did not break, did not make a new high in this uptrend. So my stop is still down here. Then when you get the two-leg pullback, you're still in the trade. You rally, and then right here at 828 or 823, we break this high, and then you can bring your stop up. And so you just kind of keep doing that. Market moves up, pulls back, moves up, pulls back, moves up, and so the stop is right here. You can use this one. It's a one candle, one red candle on the Heikin-Ashi. It's okay. It's just a little tight. I use this guy here, and that's where I was taken out up at 3009 a quarter. So that was a good 9-pointer after not really having a ton of momentum on the short side, and so that was it for the day for me. So some good stuff in terms of managing your trade. It's good to obviously have a stop, and how are you going to manage the trade if it goes against you, but you also want to have a plan for what are you going to do when it goes in your favor, because a lot of the times you can get caught up in being up 2 points and get excited and maybe close out the trade early. So you want to have a real defined plan on how to exit the trade. And over at eminimind.com, I did a webinar just a few weeks ago all about that. If you want to learn more, it's right on the homepage about trailing stops for day trading and swing trading. So next week we're going to do our live trading session on Thursday instead of Tuesday, because we have the FOMC meeting announcement, and typically the Tuesday before is kind of lackluster, and certainly the Wednesday morning into the announcement is not a day that I trade. So we're going to try it on Thursday and see if we can get some more action. You can check that out, eminimind.com/VIP. Thanks everyone, and have a great day.